Well, welcome to Market Insights. Today is February 25th, and we're going to be talking about the clashing markets. In this issue, we'll be talking about some extreme volatility that we're seeing right now, the new crop bulls and bears, and of course, the Russian and Ukraine situation and the exports more specifically. So let's get going. Obviously, the Russian-Ukraine situation is extremely intense right now. One thing I only want to talk about is the agricultural implications of that. They're both big exporters of especially wheat, and we'll see some charts on that in a minute here. So basically we have zero clue on how the situation is going to play out, especially as a Westerner. We don't really understand that situation very well. But we've got to ask these main questions like what are the implications with trade, like trade embargoes, production issues, and also risk profiling, and that will all play out in the next several months. Like, so risk profiling would be like, would one country want to buy from, say, Ukraine versus Canada, right? So this ultimately means price volatility, which is a double-edged sword. Why this matters is because the global political situation is no longer stable, and that's across basically everywhere we look right now. We don't really go into that. You guys know. Inflation is running rampant. And this is kind of a double-edged sword to any capital-intensive business. So meaning that your input prices are going to go way up, but at the same time, your output or your grain prices will also go up. So we'll probably see some wild price swings in the near future. So the bulls and the bears of this whole thing is both Ukraine and Russia have become very large players, especially since the collapse of the USSR. There was a time when Russia was a net importer. Now they're one of the biggest exporters of wheat. So what does this mean about our export programs in these countries? We don't know quite yet, but we do know that it's probably not going to be the status quo. You got to remember, the market is a fickle mistress. Even if we think it's going to go one way, it can go exactly the opposite way. And regardless if we have a Russian situation right now or any other situation, we don't want to ever forget that when we're marketing our grain. So we're going to look at this canola situation here quickly. Obviously, you can see the chart. It's got the exports, and you can see Ukraine is the gray. That's 20% of the world's exports come from Ukraine. Canada's obviously a pretty big guy at 39%, right? And the rest of the world is only 36%. So obviously the bullish factors are the conflict. There's a lot of dryness in Canada right now, and the Indonesian palm oil export ban. I don't know if you guys have been following that, but that's kind of important. That's one reason why we see soy oil up so high in the last little while. The bearish news is canola is one of the most expensive oils out there right now, or oil seeds anyways. And one thing we do notice is that a small supply is causing export demand to dry up. So that means that you get a whole new supply-demand equilibrium. And we basically, I think we have more of a neutral soybean market right now. Nothing's really in the world there to push it either direction besides outside markets. So the trend is basically, I think, on old crop, it's more of a neutral trend. I don't think it's going to be bullish or bearish. This 1,020 right around there seems to be where the market is really support and resistant right around there. And I'm still slightly bullish on this new crop. I know it rallied up to that $850 on the metric tons there. And it was a little bit higher than that the other day. But we just got to see how this plays out. So not super excited about booking new crop canola as of yet. But at those prices, the guys got to do something. When it was $20. So the wheat market here is same situation. We want to look at the Ukraine, which is of the world's export is 12%, and you know before the canola was, I think it was, what did I say, 20%, and the wheat is 12%. But wheat is such a massive crop, and that's actually pretty huge. And then when you couple Russia's on the 17% of the world's wheat exports, that's basically over a quarter. Of the world's exports come from those two countries. That's pretty massive, right? So again, that conflict is obviously a bullish factor. There's a lot of dryness, especially in Canada and the Midwest right now. If you're looking at the drought maps, you can see it's pretty orange and red right down that middle there where they grow wheat. So we won't really know how that plays out until probably mid-March once the rains start coming down there. It's still frozen. The bearish, overall, the world supplies are relatively ample. I mean, it has dropped slightly, but it is still ample. The trend is, again, I'm basically neutral on this old crop situation, and I'm slightly bullish on the new crop, maybe even a little bit more than slightly. So it's kind of a positive on this wheat market. The barley situation, it is a little bit, quite a bit different here than the other ones. Again, Ukraine exports 17%, Russia's at 13%. These are big numbers of the world exports. So they're probably going to have to come to Canada, even though we really don't export a whole pile. We feed a lot of ours domestically, right? The bullish scenario here is we have a super small Canadian crop. There's hardly any barley out there. There's still some dryness in Canada. So it is a slightly bullish market. One of the biggest bearish factors on the barley market is 90% of the feedlots are using almost corn exclusively. This small supply that we have right now has changed everything, and it's really going to prevent anyone from switching rations until at least September, because why would you switch if it's so hard to get? So even if the price goes way down, nobody's going to switch because they can't even get it, right? So it doesn't really matter what's going on. It's a total landlocked island of supply and demand right now with the barley situation in Canada. So, and also the export demand has dried up, as we see that reflected in the elevator prices for feed barley. They're at least 25 cents to 50 cents below the current feed market, right? So that shows you one thing. The trend on the old barley here is for old crop and new crop. I believe it's basically neutral to slightly bearish on the old crop. I think it's going to fall apart, but I'm more inclined to say she's going to go down rather than up. And the new crop is more of a neutral to bearish. I mean, that depends on obviously the rain situation, but there's really no reason for it to rally up for new crop anyways. We're getting in the $7 plus range now for off the combine barley, and that's feed too, right? So that's pretty good, and that's in your yard. So let's just look at some quick charts here. With the extreme volatility, price swings like this that we are currently seeing. Obviously, with this political instability, we have a big inflation market. We talked about that, I think, last time. The market is desperate to know what to do. And this is why we're seeing these extreme volatile prices, and we're going to continue to see these, right? This is why you need to have some smart planning and figuring out on what to do on your targets and where to put them. Especially look at the canola. It went up to basically, $1,100, and now it's back down to under 1,000 or just above 1,000 there. That is a huge, huge move in a very short time. And if you're not paying attention to this and you don't have your targets in, you're going to miss out and you're going to be stuck at the bottom wondering what happened. This is a good reason for anybody to purchase one of the programs that I offer. So with that, it's always time to upgrade your grain marketing. I know it's getting more and more complicated out there. If you are looking for stuff, I highly recommend the Market Defender program. This is for the guys who basically know where you want to go. It's not a full-out service. It's not just a newsletter. It's kind of an in-betweener. And it's designed for farmers who already have a grain marketing plan. And you understand two things. You understand really how valuable a GPS technology is. And that's kind of where this Market Defender comes in. It's kind of like a guide, guiding you along the way. And the importance of getting an unbiased perspective. Obviously, that's what I provide. So with that, I hope you guys have a great rest of your day, and we will talk later. Thank you.